My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey folks, welcome back to Ye. We got a really special treat, an old friend, a very accomplished real estate entrepreneur, a fellow podcaster. Mr. Chris Larsen is zooming in, and Chris has been in the real estate space for quite some time. You wouldn't know it for looking at his bright-eyed, perky, young-looking face, but Chris, I think it's been like 16, 17 years you've been in real estate, if not longer. I think you bought your first single family.
Add a decade to that, Dave. Add a decade to that, yeah. It's
okay, because I think you got started in university with your first single-family home or something crazy like this, and these days, well over, I believe, $1 billion in real estate transactions and all that kind of good stuff, and doing lots of great stuff with syndications. So, Chris, welcome to the show. Great to have you.
Dave, great to see you again, my friend.
So, Chris, for folks that aren't familiar with you, maybe give us a quick little run through of how you got to where you're at right now, how you got started, because I know you're one of those smart guys that has like an advanced engineering degree and quite a professional pedigree, but you've been really investing in real estate all the way through.
Yeah. Well, thank you for that. And yeah, I'll give you kind of my genesis story in real estate, because it's, I think that's really, probably the most interesting part in my opinion. Yeah, I was 21 when I bought that first property, and you can do the easy math. It'll be 26 years here this fall.
Well, in my book, you're still a young punk there, Chris.
I feel the same way. So I went to Virginia Tech. I got an engineering degree, but I didn't go there really for engineering. I went there to race my bike, and I wanted to go pro. So
race your bike
time.
Okay.
Yeah, bicycle. So I was training a lot, but my training partner, and he was a year behind me in school. He was going to be my roommate. He passed away in between my freshman and sophomore years in college. So I went back to school. I didn't really want to be an engineering student. I just wanted to ride my bike and race, and I was very successful on my bike that year. But the next year following that, which would have been my junior year, my team went pro, and I walked away from the sport. I quit. And a big part of it was that I had a lot of introspection after my friend Chris died. His name was Chris as well. And I was like, wow, if I die tomorrow, like, am I really going to be satisfied with what I have accomplished? And I just made a promise to myself, Dave, that I wouldn't have any regrets. So if something came up, if there was like a girl I wanted to ask out, or somebody invited me on an adventure, I was like, you know what, I'm going to do it. And I had to say no so many times when I was racing, because as a cyclist, you have to be super disciplined. Yeah. So here I am taking a full load of classes for engineering, plus I'm training 20, sometimes up to 30 hours a week on my bike. And I wouldn't go to parties. I didn't have a girlfriend. And I was like, man, I'm really sacrificing.
Not much of a life outside of school and biking.
No. Yeah. And there was a lot going on in the sport at that time. I actually got to train with Lance Armstrong. I had a lot of friends that were going to Europe, so I kind of knew the dark side of the sport. Mm. And I think a lot of professional sports are like that. You get to the high levels, and people are going to do everything they can to maximize their performance. And I often say that I'm one of the lucky ones that I wasn't good enough to be at a high level professional racing level. So it was a lot easier for me to kind of step away. But, during that process, that following year, I thought, okay, like if I want to live life on my own terms, if I want to, take advantage of opportunities that are out there, I need financial independence. So I started on this path towards financial independence. And I started by trading in the stock market. It was ripping in the late 90s. So I was making like $1,000 a week as a junior in college trading, but it was very, very stressful. When I was laying in bed after not sleeping all night, it was 3 a.m. and I'm 20 years old, and I'm thinking, not only do I not want to do this for 20 more years, I don't think I can do it. Like, I think it'll kill me. So I said, there's got to be a better way to invest. So I read 250 books on investing, business, the stock market. I mean, all kinds of different trading. I got an MBA in finance and portfolio management, almost got a PhD. And along that way, I said, you know what? Real estate is going to be my path for success. And I didn't come from a lot of money.
Is that kind of what came out of those 250 books? That was like the common denominator that just made the most sense to you?
For me, it did. And I think, as an investor, for those that are listening, you have to be honest with yourself about like, what type of investor are you? And I liked real estate because I could have some control over it. I could use leverage. And, as somebody that didn't have a lot of money, I had, some money that I built up from my trading and, some of the businesses, because I've always been an entrepreneur. I was able to buy that first property with $3,000 down. I bought the next one next door. And, but then I ran out of money. So I entered a field in medical device sales. But a lot of people, they kind of get it backwards. They say, when did you transition from, medical device to real estate? And the answer is, I was in real estate before I was in med device, and I just needed a path to create capital. So I think if you're out there and you're young, the number one thing you can do is find a high income career or business that you can start, and then plow as much money as you can into real estate. And that's what we did, and ultimately shifted from residential to commercial investing. And then we syndicated our first property just over 9 years ago. And that was a 100-unit multifamily deal in Atlanta, Georgia. And here we are. We're about $2 billion worth of acquisitions with our partners over the last decade.
Very, very cool. A couple of questions come to mind, Chris, and I'm going off on a little bit of a tangent here, but 250 books. My God, that's impressive. Most people in their lifetime won't get through a 10th of that, statistically speaking.
How about that? Wow.
Yeah, not even close. Even some of us who consider ourselves readers, 250 books by the time you're 21 is pretty impressive. So how were you reading these?
Yeah.
Did you take a speed reading course? What was
you actually nailed it, Dave. Yeah. One of the first books I read was a book on speed reading.
Nice.
So I said, okay, if I want to consume more information, what can I do? So I took a speed reading course. This was one of my secrets during my MBA program, and all my classmates were like, dude, you're a freak. Like, how do you read the Wall Street Journal every morning? So what I did was, Audible was new at the time, the Audible app. So I downloaded the Audible app, and I got like a $10 Wall Street Journal subscription through the business school. And that came with an Audible subscription. So I would go to the gym every morning at 6 a.m, and I would listen to the Wall Street Journal headlines. So here I'd be sitting in class at 8 a.m, talking about what I read in the Wall Street Journal, and everybody looked at me like, you get up and read the Wall Street Journal, basically.
You didn't tell me what you heard in the Wall Street Journal.
That's right. Yeah.
Smart.
Yeah. So the cool thing is, like, if you say, hey, I want to read more, there's app called Blinkist, Blinkist, which is awesome for summaries of books that you can listen to or you can read. If you like to listen and you have a lot of time in the car, then what I would suggest is get to the point where you can listen at like 1.5 times.
Yeah, which is easy. Which is super easy.
Yeah. And then with AI now, you can actually, there's tons of apps out there where you can actually, take the text of books, you can highlight them, and you can take the highlights there and always go back and reference them. So, but I did it the old fashioned way. I would just read about an hour a day, 2 hours a day. But
you were speed reading, so you're getting through, literally you could be getting through a book fairly quickly that way.
My goal was a book a week. And if I didn't complete it during the week, then I would set aside some time on the weekend and just sit there. That another tool that you can use, if anyone's ever not heard of it, it's called the Pomodoro technique. So you basically, Pomodoro is the gentleman, and he used, there was a gentleman, he used a timer, a kitchen timer that was a Pomodoro tomato.
Okay.
And he'd set it for 25 minutes. So I chunked my days up into 1.5 hour blocks, and you focus for 25 minutes, take a 5-minute break, and do that 3 times in a row, take a 30-minute break. And if you look at my calendar today, I still use that. If you book a call with me, it's going to be a 25-minute call, so I can take a little 5-minute break to get something to drink, go to the bathroom, and then get back to my day. But yeah, so it's really the key to speed reading is getting in the right mental state, calming your brain down, and then focused without distractions. And we don't do a great job with distractions these days, I find, with a lot of stuff. So that's probably my number one thing, number one tool that you can use if you want to be successful. Learn how to focus your time and energy, and be present in doing what you're doing.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Cool. Well, thanks for letting me diverge down that path.
Yeah.
That's fascinating.
Yeah.
So Chris,
it's not as impressive as it sounds. I don't think I think anybody can read a book.
Anybody can do it, but nobody does it. Very few people do it. So the fact that you did it, I mean, it's like anything, right? When you're competent at something, it's no big deal, but to other people, it looks very impressive. So, yeah. Hats off for that. So looking at the real estate side of things, Chris, last 9-10 years, you've been really focused on syndications. At what point did you stop the medical device sales career and get into real estate full time?
Yeah, it's been about 5 years. So I was doing it like simultaneously, concomitantly. And I was working, 16 hours a day. So, that's another thing. There's really no substitute just for focus and hard work. And people are like, how do you, run this medical device business and, you're talking to investors and you're doing this? And the answer is I would, work, from 5 a.m. till 10, 11 o'clock at night. It was a lot of time, but I had, I knew what my goal was. And basically when the medical device side wasn't fun anymore, COVID hit, it was a lot of challenges in that business, but just wasn't fun anymore. And my boys were getting older, and my goal was always to be able to spend time with my boys as they got older. Because I had another big loss in my life when I was 5. I lost my father, so I didn't have that same relationship with my biological father. I had a great stepfather, but I wanted to make sure that I could have that time, with my boys and do that. So, yeah.
So what does the portfolio currently consist of, Chris?
Yeah. So the bulk of our portfolio, the core of our portfolio is still value add multifamily. And I think the tailwinds, and I'm remiss, I haven't mentioned my book, but if you want to get a free copy, go to nextlevelincome.com. And if you put your address in, even if you're up there in our beautiful neighbors to the north of Canada, where my wife's from, I'll send you a copy if you're in the United States or Canada. But I think the fundamentals, we're still 7 million units short in this country. Yeah. We do a lot in the affordable space. So we do some really creative projects in that. Mobile home parks, we have 20 mobile home parks, which are, I think, kind of a different flavor of multifamily affordable housing. Really good area if you have a solid operating partner, as we do. We also have 12 self-storage facilities. We have 32 car washes. And we also have a debt fund as well. So we're financing fix and flips for entry-level homes that, again, are a piece of that affordable real estate that's needed out there. We have some other stuff as well. We make some investments in preferred equity positions in commercial properties. But all our investors get access to all this. You can click on our invest link on our website and learn more about that.
So Chris, it's hard to kind of keep tabs on everything all by yourself.
Yes.
So when you get involved in deals, you talk about, partners and things like that. So are you typically a co-GP in these projects? Yeah. Are you the lead sponsor in some of them? Where do you guys fit in?
Yeah, great question. So when I started off, it was just me and one partner. So it was just the two of us doing everything. And we were doing about one acquisition a year. But I think there's really 3 pieces of success when it comes to commercial real estate. So it's finding the deals. So you have to have the ability to source and analyze the deals, underwrite those deals. 2, you need to fund the deals. That means you need to be able to get loans, and you also need capital from investors, whether that's institutional or family office partners or investors that are coming in as individuals. And then you need to operate the deal. So as I stepped back and I looked at kind of where I really enjoyed it, I love looking at deals. I love, looking and analyzing deals on the front end. But we've got a large group of investors that we work with now. So I typically now, Dave, I find good operating partners. And yes, sometimes I'm a GP on those deals. Sometimes we do what's called a fund of funds. So we're investing our funds into these deals that we like and pulling that capital together. And what that allows is for our investors to get better terms, get access to deals that they may not have had the ability to become a part of as an individual, a smaller investor, because we may have to write, say, $1 million or one fund, it's a $5 million minimum check. So if you're an investor, you can come in alongside of us with our other investors at 50 or 100,000 and participate in that fund, for instance. But yeah, the key in all of these really is your operating partners. And as margins have shrunk, as prices have gone up, as interest rates have gone up, really operations is where the rubber meets the road. So that is absolutely key in all these.
So the last number of years, things have been especially challenging, primarily in the multifamily space. How has that affected you guys with your partnerships? And what are you seeing happening when it comes to capital raising in today's environment?
Yeah, so we were chatting before the show. It's harder today to raise capital, and I think there's a couple different factors in that. So, and then I'll address the kind of deal flow and that sort of thing as well. But in 2022, when the stock market was down, when the bond market was down, when real estate was just producing crazy returns, for the last 5 or 10 years, it was easy because everybody wanted to be in real estate. The past couple of years of rates have risen and cash flow has decreased, and the stock market has been doing great. Investors are less likely to do that. And typically what I found is investor sentiment is kind of the opposite of what the opportunities are out there. So when the stock market, usually. But when the stock market is at all-time highs, investors don't want to take money out of the stock market. They want to put more money in the stock market.
Yeah.
When it's at lows, they want to pull money out of the stock market and put it elsewhere. So I think that's a really good lesson. You should allocate, into the areas that are at, kind of cyclical lows and do that. And I think we're at one of those points right now with real estate. But deals have been really hard to pencil out. We're starting to see that tide shift. So we're seeing the deal, like there were hardly any deals the past couple of years. So, it's hard to satisfy investors if but we're not going to just do a deal to do a deal. We wait for those good deals, to come across our desk. Now, from an operating perspective, floating rate debt, interest rate caps made a lot of sense, in some cases over the past few years. But it's, those properties now have to be refinanced. So, we're having to work through that on some of our deals. But we're also, we're closing on a deal this month as we're recording this, or in the next month, I should say, because we're right on the cusp of the new month here. But that deal, we're buying at a 20% discount to what the seller purchased it at. So there's two sides to that coin, Dave. There's deals that are coming on the market because sellers or operators have to sell to get out from under that debt. And then, some of those deals, you have to restructure the debt and figure out a way to maintain that. So we're working through some of those as well.
Yeah, I think there's going to be tons of opportunity coming down the pipeline.
Yeah.
From everything I see in here, that's for sure, Chris.
Yeah.
So as we're wrapping things up, Chris, you've got an amazing podcast that I had the honor of being a guest on recently. Tell us a little bit about the podcast and who that's for and what it's all about.
Yes, sir. Well, so first off, thank you. We wouldn't have a podcast without great guests like yourself. And we've been doing the podcast. Next month, it'll be 7 years since we recorded our first episode. So check that out at Next Level Income. You can click on the podcast link. But what I found, Dave, was, the first few years we were just working with investors and doing deals. And I'd get a question, hey, Chris, I'd like to invest, but I'm not there yet. Like, how did you get to this point? So I'd, talk to that investor, and then, the same question would happen. So, that question that came up every month or two started to come up every week and then every day. And it was the same questions. And, my marketing partner at the time, we talked, and he said, yeah, like you should start a blog and start a podcast. So that's where Next Level Income was really born. And our goal at Next Level Income is to provide investors the opportunity for financial independence through education and investment opportunities. So if you're just getting started, you can go on our website. There's a ton of free information, to help you make more money, keep more of your money. But then we also help investors learn how to analyze deals. So we have syndicators come on. We have an online course through our community that you can take to learn how to be a better LP investor, a better limited partner, and analyze deals. and do that. And it's been great. Got to meet people like yourself, and it's something that we really strive to do because we just don't have great financial education in our school systems. So so our goal is to fill that gap.
All right, Chris, it's always great catching up with you. And you kind of gave us a little sneak peek of your book. Tell us a little bit about that. Remind us how we can get a copy of that. Remind us how we can connect with you. Just let us know.
Yeah, so check us out at Next Level Income. Again, you can get a free copy of the book. I dive deeper into my story, my story of loss, my early mistakes that I made, the framework that we use to invest in value-add multifamily. I go through all the steps in there so you can get a better understanding of that. I also talk about the value of things like cash value life insurance, which is really kind of the base of our family's financial pyramid. And then, talking about, just a system that you can use, like how to save more money, how to keep more your hard-earned money so that you can make those investments. And really, Dave, what I found is, with some discipline, which you say, people that have done it, you look and you say, this is incredible. But, what we try to do is say, well, how do you do it? And if you're making a lot of money, what I found is you can become financially independent in 5 to 10 years. So I think really it's very achievable for pretty much everyone to become financially independent 7 years with the right plan and the right discipline.
Excellent, Chris. Well, thank you so much for being on the show. It's always a pleasure.
Yeah, my pleasure's mine, Dave. Thank you again.
All right, everybody, take care. We'll see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.